Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Jonathan Fisher, PSG Wealth, Sandton, Grayston, and Chris Reddy from All Weather Capital. Be sure to send your question through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gentlemen, appreciate the time today. Let's start off with what may or may not be the big story of the week. We've got rate decisions from the FOMC on Wednesday. We've got our own MPC on Thursday. None of us are economists. I'll put that out there to a start. Jonathan, with the FOMC, the debate seems to be if it's going to be 2 or 3 cuts this year. Certainly it does seem that they're going to get their foot back in the gas. And whether it's 2 or 3, that's a bunch of cutting in a, frankly, rising inflation environment.
Yes, I think the pressure's on to reduce rates in the States. And I think that they will drop rates by 25 basis points on Wednesday. And, the big thing is the inflation outlook and actually what happens with inflation. President Trump's been putting a lot of pressure on the FOMC to such an extent that he wants to fire, Mr. John Carney. So the political pressure is quite intense, but I do believe that, it's a tough call because, quite frankly, I believe that the tariffs, that the Trump administration have put into play actually will be inflationary, even though it might be for the short or medium term. So it's a tough call, and John Carney's been the guy that's saying he is really reluctant to reduce interest rates based on the outcome of what could happen with inflation due to tariffs. So it is a tough call. Having said that, we do believe that the markets are expecting the FOMC to reduce rates certainly by 25 basis points this week. Now, whether they do it, again going forward for the next few months before year end will all depend on the inflation figures coming out. So markets are expecting it, and I think this is part of the reason why we're seeing buoyant world markets generally.
Yeah, up at or around all-time highs. Chris, locally, our MPC is now anchoring, I must choose my words carefully, anchoring at 3%. Inflation was 3.5. We've got another data point this week around in inflation. Do we get any hope of a cut locally, or is that it for now?
Thanks, Simon. I think the SARB is probably going to take their cue in terms of their cutting cycle, depending on what the US does this week. I think our view is that if we do see a higher, close to a 50 basis points cut in the US, that might give the SARB some kind of leeway to potentially put in a 25 basis points locally. As you would have seen, the Rand has been quite strong here to date. Yes, it's mostly dollar weakness that's been driving the stronger Rand because we have been a bit weak against the euro and the pound. But given that inflation has been within that 3 to 3.5 band, there is some room to cut rates. Our real rates are still quite high. But I think we're probably going to take our cue in terms of just what the FOMC does before our governor gets some kind of comfort around cutting rates.
Yeah, our real rates are now, 7%, which is a chunky number. Chris, let's stay with you a second. Outsurance results out. A couple of moving parts. Short answer, less disasters means less payouts. But a good set of numbers. Special dividend. Ireland, which is their new territory, going according to plan. Market very much liking it. Stock up almost 8%. Your take on the results from Outsurance and the potential here?
Yeah, I think So I mean, I think part of the reason that Outsurance has been performing that well today is that the share has been under quite a bit of pressure over the past, say, 3 to 4 weeks, and I think that has been a function of a couple of large sellers in the market, which is something that we've been monitoring quite closely, and that's why it was down almost 5% month to date because of the selling pressure. That being said, though, I mean, operationally wise, it was a very strong set of numbers, which was pre-guided with the trading updates. I mean, I think the fact that Ireland's only going to break even, I think by 2029, is not an unknown to the market. I mean, it typically takes a while for these new ventures to actually break even after a number of years. But I mean, I think if you look at Outsurance in the context of SA, I mean, there aren't that many local companies that are able to provide this double-digit earnings growth in this environment. I think that is why you're getting this semi-flight to quality in this environment. I mean, we saw it last week as well, even with the FirstRand numbers as well. FirstRand had lagged the banks into their results, came out with a good set of numbers and also a positive update, which I think the market also liked. So I think that led both these shares performing well on the results there.
Yeah, and it was. I like your point around that. And FirstRand, a particularly strong forward outlook. Jonathan, for you, the Outsurance numbers, I mean, it has been. I mean, it's been a great investment since they did the corporate restructuring to make it Outsurance. Your thoughts on the numbers in the stock?
Excellent. I mean, you know, to grow normalized earnings by 33%, headline earnings per share up 29.5%. to 298 from 230. You know, the dividend also up 26%, the total dividend. It's a great set of numbers. So I like Outsurance. And I mean, look what the market has done today, up 7% based on these numbers. You know, the outlook was very, very good as well from management. You know, they talk about continuing to deliver outstanding service to its clients and executing on its growth strategy. You know, they've also got increasing geographical diversification, which does strengthen the company's risk profile. And it looks like they've got a long runway of organic growth in their chosen markets. So I think that going forward, they're going to continue having strong, resilient growth. I think it's a brilliant company. You know, this was tucked into the RMI stable together with Discovery and Momentum, Metropolitan, you know, for many years. And in my mind, this was like one of the stars within that, you know, grouping of companies. So now that it's been unbundled, it's flying on its own, and I think it's a brilliant company. So it's certainly one that I would consider accumulating on weakness. And as Chris said, it has been weak over the past couple of weeks. Great opportunity to accumulate these shares.
Yeah, and I take your point. And, you know, it's good markets that they're in, good management, and a boost to investors now that, as you say, it's taken out of that RMI. Let's go to something slightly different. We had the Oceana update today. Fish oil prices collapsing. That's a long story. They were booming last year because of challenges in South America. Jonathan, I always look at fish stocks and think to myself, surely there's something here. I always manage to stay away because they just never seem to work. Kind of like chicken stocks, I suppose. Good protein, but highly volatile. Good for eating, less maybe not for investing. Your thoughts on fish stocks in Oceana?
Yeah, I mean, not a good trading update from the firm. And it's a difficult market to consistently do well in or outperform in. It might be different to chicken because chicken you're farming and you can control.
Yeah.
Fish to some extent you can do the same, but they're out there swimming all over the ocean. You've got to be able to catch them. I think that's one of the key differentiators between controlling your asset and seeing it and being able to grow it and farm it and so forth. But look, the fish oil price, I mean, came down. I think it halved in this period, and that's due to strong supply coming out of, I think, one of the South American countries, probably Peru, if I'm not mistaken.
Yeah, that's it, Peru.
When I looked at it. So these are, listen, it's a difficult one. I'm not a fan of Oceana. I think there are better food stocks out there, but it's a tough environment that they're playing in, and not a good set of results. I think the price is under a bit of pressure based on these numbers today.
Yeah,
They've done well. I think the last 2 or 3 years they've improved, but with this number, I don't know. I just never really got into so-called fish-related shares just because it's just too risky.
It absolutely is. I take your point. I mean, they're out there swimming in the ocean. You can go and catch them. That's diesel, and diesel is costs. And Chris, do you have a different insight into our woes around fish stocks?
No, nothing else to add to what Jonathan's already mentioned there. I mean, it's not something that we hold in our portfolio as well.
Yeah.
I mean, the other factor as well also is liquidity in the share as well, right? I mean, only 4,400 shares are traded on the day, so that is one of the challenges as well in some of these small caps, the lack of liquidity to actually get in and get out.
That's actually a good point. And then your buy and sell spread, although in this case, not too wide, but it can get quite scary at a time at points. Chris, let's stay with you a moment. We're at the Southern Sun AGM update. I mean, actually not a bad update. And I contrast it to a degree with City Lodge, and I appreciate they had some refurbishment issues. And so Southern Sun in, I think, is it their Seychelles, and then, of course, political violence in Maputo. The leisure stocks, your thoughts on Southern Sun? Because, of course, Sun International is now almost gaming more than anything else. Southern Sun for you?
So I mean, I think the update at the AGM was quite positive for a number of factors. I mean, you can see that there's a common theme in terms of just how well the Western Cape is doing. I mean, you saw it with this update with Southern Sun. You even saw it last week as well with Growth Point with regards to just the waterfront, but also additional capex going into the Western Cape given demand from tourism and also the semi-migration play on the go. I mean, I think the other point as well, just worth flagging, is even in Growth Point's numbers, they were also talking about just additional demand coming through for that Umhlanga Ridge region. So it seems as if KZN is probably troughing at these levels. I mean, Southern Sun's got the Pearls asset as a way of getting exposure into that province. So I think that was a standout feature to say, look, we are still seeing demand coming through into KZN after a number of years of lack of investment coming in there. And then Gauteng, good performance given the amount of events that they've had. I mean, we've had G20 as well earlier in this year in South Africa, so that's also boosted demand for occupancy. So, I mean, I think a common theme with regards to this occupancy is rising. The point around the Seychelles, I think that's more just a timing element because, I mean, the hotel was closed for refurbs. So that would come through. I think investors would probably look through that for the next couple of months.
Jonathan, your thoughts on Southern Sun? Very much an old school hotelier, as I said. They haven't really got the gambling part at all.
Yeah, look, I thought it was a great update from them. It's kind of two stories to tell. The South African business seems to be on a front foot. They talk about SA occupancy up marginal from 57.6% to 59.2% from the prior period. And the average room rate also in South Africa grew by 6.7%, leading to room revenue growth of 9.7%. Offshore, they're battling a bit. You guys spoke briefly about the Seychelles Hotel Paradise Sun. That's been closed since April up until now, so that's hurt, and that was due to refurbishment. And then also in Maputo, the operations there not doing well since the unrest in December, the political unrest. So they're struggling a bit there. Similarly, Tanzania, Dar es Salaam, they've got an asset there that reopened, I think, in October last year, and that's been trading under expectation. Okay, that's not political, but just under expectation. There's low tourist numbers coming through there. But it's a good share, and it trades on a 12 times multiple. Dividend yield not bad, just short of 3%, so I do like it. And they seem to be managing their assets well. Coming up now, there's various conferences happening, the B20, then the G20, so they'll benefit from those big conferences over the next couple of months.
Yeah.
So I do like it.
Yeah, absolutely. And there is a lot of activity happening, even up in Gauteng, as you say. G20 November, we've had a bunch already going through. Question came through around Naspers at the AGM. They took a vote on a share split. They've confirmed the details now. It will happen end month. The question was, please ask your panelists if I, as a shareholder, should worry. Jonathan, this is semantics. They're basically going to slice the price by 5 and increase quantity. Naspers itself, a stock you like? I mean, this is probably our best China exposure we have in our market.
Correct. So in terms of the viewer's concern, should he or she worry? Definitely not. If anything, when a big elephant great company like this splits their share, it tends to be positive in time.
Yeah.
It just makes it more affordable, I guess, for the average person out there to buy shares. So they're going to be splitting 5 times, at a price of 5,834. You divide that by 5. What's that? It's probably about 11 or 1,200 rand a share, thereabouts, depending on how it all finishes up on the day that they split. But it just makes it a lot more affordable to buy, let's say, one Naspers share, as opposed to what it is currently. Getting back to the thesis for the company, great company. I love Naspers, and the company's definitely becoming more successful in their other businesses becoming profitable. The food delivery business, big thing for them, and my understanding is those businesses are starting to make some profits, and the share is starting to re-rate. Because of this. That's besides Tencent still doing very well. So they got a long way to go in terms of building up those other businesses around the big Tencent offering in terms of value. But I think it's a great company.
Yeah, Chris, your views on Naspers? I mean, as a JSE investor, it's a great way into China. It's a great way into China tech.
Yeah, so we still like Naspers. I mean, predominantly for the exposure into Tencent, we've got a very positive view on China tech as well. So for investors that can't get direct access into say Hong Kong tech, Naspers is a great way to get that exposure. I mean, just going back to your point around the split. I mean, when the company does this, I mean, theoretically, the picture doesn't get bigger if you slice it into more pieces. But I mean, what we've seen as well in the case of, say, Tesla, when they did their stock split, I mean, the share was quite well supported because it does open up the market, especially to the retail client base that might not necessarily be able to buy like a 5,800 rand single stock. But if you're in the thousands, I mean, you can get a bit more support for the share. So it's typically well received.
Yeah, we saw the same with NVIDIA. They did a split, I think it was late last year as well, at the same time. Here's a stock I know very little around. Question coming through. E-Media spinning out of Remgro. Should I be having a look? Is there any value there? Chris, any insight, deep or shallow, to E-Media? I have to be honest, mine is shallow.
It's going to be shallow on my side. I mean, it's not a company we follow particularly well, but I mean, what we have seen with these spin-offs is that it can create an opportunity, especially for existing Remgro shareholders that don't understand the company that well, or it's potentially illiquid. So, like in the cases of, say, Valterra or even Tungela, these spin-offs, if there's quite a bit of selling linked to it, that typically can create an opportunity if you are positive the share. That's about as much as I can say on it.
That's about as much as I can. Jonathan, do you have any deep insight into E-Media? Nah.
Absolutely nothing. I think the share price might have eased back over the last year, but I don't know. I mean, I think their biggest asset is actually, correct me if I'm wrong here, Simon, been in the media industry, but I think it's a channel on TV called ETV. And I think it's profitable, but I don't follow this company. So I can't say whether it'll be positive or negative.
Yeah, it owns 67.7% of the ETV, but I take your point. It is very, very small. And because it was held by Remgro, there was no liquidity. That might change. To Chris's point, it might change in the downside to start with. Jonathan, another small cap stock, Caxton, they had results out on Friday. Question came through. They're sitting on about 66% cash relative to their market cap. Is this a value opportunity? And I'm going to add the disclaimer because I've been caught by these before. Or is it value trap? Is Caxton one on your radar, Jonathan?
No, it's not. The little bit that I know about Caxton is they actually seem to be doing a good job in diversifying away from their core business of publishing and distribution of various publications and getting more into packaging and on a more recent basis, stationery. And I believe they've been quite successful in that. I do know that they took a stake in Impact, which is a packaging business, to align those interests of their, stated strategy of getting into packaging. But, getting back to the fundamental thesis of buying this business or not, I don't know enough about it and haven't done enough work on it to say yes or no. Having said that, I don't hold any Caxton in our portfolios.
Yeah, and it does I'm looking at the chart. Every time results come, it seems to jump and then drift and then jump a year later. Chris, do you have any deeper thought around the Caxton?
I mean, just a couple of points. Yes, you got about 2/3 in cash, but that is obviously create the dividend that needs to be paid, as well as the pref share dividend that needs to go out as well. That being said, though, I mean, in the small cap space, I mean, there's a couple of shares that are actually giving you. I mean, the amount of cash is quite a big chunk of the market cap. So you've mentioned Caxton. I mean, you would have seen Supergroup as well last week. Supergroup is about 4 billion in cash. The market cap's 4.9 billion. I think the question is the institutional investors have got to answer is, I mean, in the case of Caxton, 100 shares have traded. So it's the same story. If you are going to put on a position, how do you actually find the liquidity to add the position versus buying something like, say, Supergroup or even Reinet? In Reinet, the cash is bigger than the market cap as a case in point in a liquid share. So that is the key point with regards to some of these small caps. Yes, there's a lot of value there, but can you actually put on the position and then can you exit it at a price to actually lock in those gains, given some of the challenges around liquidity?
Yeah, I mean, one deal, 100 shares, moves at 9.3%. Looks great on the chart, but it would be, hard to get in or out in that type of a situation. Let's go to stock picks. Chris, we had a question coming through around Mr. Price, but I've parked that for Wednesday because yours is Pepkor.
Yes. So stock pick is Pepkor. So a couple of points around this. I mean, the share post the last placement by IBEX, I mean, the placement was done at 25.45. The share got up to, I think, just touching distance of 28 Rand. I think the challenge that for it coming off those 28 Rand levels is that there was basically a secondary placement. Because if you remember the terms of the IBEX placement, the creditors into IBEX got a significant portion of the placement. And what actually happened is that post those shares settling, the creditors actually started bleeding those shares into the market. So you had like a two-stage placement come through. We do think that a lot of that secondary placement by the creditors has come out through the wash now over the past couple of weeks. And that's why the share actually fell about R1 below the placement level. I think it got to about 24.50 last week. At current levels, I mean, I think Pepkor is probably one of the best placed companies to operate and gain market share in this value segment via Pep and Ackermans. But I think the big growth driver going forward is going to be their fintech division that does payments as well as actually extend credits. And in a declining rate environment, you should get some support as well to grow revenue off that division. I mean, you're going to have a macro tailwinds as well with regards to this rate cuts and then also potentially population growth supporting that baby and kids segment of this. And I think the other point that we like as well is that management have got significant alignment with shareholders, with Peter Erasmus also buying a significant chunk of shares last month. So that ticks the box from an alignment point of view. I mean, at a 13 multiple, it's there or thereabouts, similar in line with Mr. Price, but I think Pepkor does give you a much larger growth potential to extend their They're offering both in SA as well as with Grupo Avenida in Brazil.
Yeah.
That's the stock pick for us.
And that Flash, the Flash is, I mean, Mr. Price has a
Excellent.
bit, but Flash is absolutely brilliant. And then Jonathan, Capitec.
Okay, so I'm going with Capitec, growth share or growth company. They came out with a trading update about a month ago, on the 13th of August. And this is for the half year. And basically they said HEP's going to be up anywhere between 22 to 27%, from 55, 44 a year ago. So that takes them to anywhere between 67 to 70. On the announcement, the shares did ease. They eased back. I think the market, the same old story, buy on rumor, sell on fact. They were up to just short of 33,700 and then dipped all the way down to about 3,400. Now they're about 3,500. But, great company. Those numbers actually are going to be released in 2 weeks' time on the 1st of October. And I mean, we expect a continued uptick in net interest income, increase in loan disbursements with the credit loss ratio remaining stable, and also an increase in net transaction income, Simon, as active client numbers increase and transaction volumes continue to grow. They're trading on a 29 times multiples. I mean, this growth is kind of in line with their multiple. Having said that, they might be flat for a while, but certainly on weakness, closer to the 3,200 level, I'd be accumulating.
Yeah.
My view is that they're going to continue growing at 20% plus for the next couple of years, based on what they're doing and getting into different areas of business too.
Yeah, absolutely. And that 29 PE sounds scary until you see their growth. And then it's like, but then it's a peg of one. And then it's like, actually, this is not a problem. But we'll leave it there for Stockwatch today. Thanks to our guests, Jonathan Fisher, PSG Wealth, Sandton, Grayston, and Chris Reddy, All Weather Capital. Remember to tune in tomorrow at 5 p.m. We'll be bringing you the JSE Stock Pick event, where you will get inside analysis on some of the stocks that are catching the eyes of the investor community. That's right here on Business Day TV. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.